We're doing a feasibility study for bringing an NBA franchise back to the city of Seattle. I'm Peyton Brady.
I'm Ross Power.
And I'm Jordan Lundburg.
And here we're going to start it off with giving you the executive summary, and Ross is going to guide you through that.
All right, the study will basically provide insight into the feasibility and impact of bringing this team back to Seattle. It's going to outline a market analysis, project descriptions, key project assumptions, economic and fiscal impacts, a detailed listing of the financials through various statements, and a final conclusion and recommendation based on our findings. Through our research, we found that Seattle is a strong market that has the ability to support this venture. The total cost of the arena will cost around $490 million. Most of this financing will come from a private investor, Chris Hansen, which will amount to $290 million, and the rest will come from a city-paid tax bond, totaling $200 million. After implementation of this project, there should be a significant economic impact on the city. New jobs will be created, new revenues will be produced that will benefit the city in a number of ways. And overall, this venture will not cost the city an unreasonable amount of money. Now I'm going to go over some of the market analysis, the population demographics. Right now, Seattle is the largest city in the state of Washington. It's located in 616,500 residents. The greater metropolitan area is listed around 3,707,000. There's been a population increase of 8% from year 2000. The demographics are approximately 70% Caucasian, 13% Asian and Pacific Islander, and 8% African American. Seattle is also ranked #1 in percentage of bachelor degrees as well as high school diplomas. It boasts an average median family income of $85,600. In this time, as necessary, as there's a very high cost of living in Seattle. Now we'll talk about the climate. It's generally mild with a significant amount of precipitation. The average temperature in the summer is usually 75 degrees, in the winter 40 degrees. And the average annual rainfall is approximately 36.2 inches, which ranks 44th among cities in the U.S. The city boasts a vibrant metropolitan hub with a wide range of sports and entertainment markets, arts, and abundance of shops and restaurants. Tourism makes up a big part of Seattle's revenues. This is in part due to Seattle's proximity to Canada as well as a few other big cities. Seattle also acts as a travel hub between Asian and Pacific countries coming to and from the U.S. It's estimated that Seattle sees around 10 million visitors a year who spend $6 billion annually. Seattle is also a premier sports team market with professional teams in the NFL, MLB, MLS, and WNBA, with a number of other smaller league teams. Now we'll talk about the market analysis a little bit. Seattle's GDP was listed at $231 billion in 2011. The unemployment rate was 9.2%. GOV is rated AAA by both Standard & Poor's and Moody's in 2010. City property taxes were listed at 32% in 2010. State property taxes were listed at 25%.
Okay, the venue data. The former Seattle Supersonics play their games in Key Arena in downtown Seattle, which was built in 1962. And has since seen a couple of remodelings, the last which cost the city $75 million in 1995. It was primarily financed with government bonds that will soon mature in 2014. The NBA Commissioner David Stern thought the facilities are up to par to host a team in the NBA, and with little success trying to form an agreement between the owner and the city of Seattle, Bennett bought the lease the team held with the arena. He moved the team to Oklahoma City in 2010, Seattle then sued for a breach in a lease agreement. After litigation, the settlement was reached in the summer of 2008. Seattle received $45 million for the settlement and is scheduled to receive another $30 million if the team doesn't return by 2013. Key Arena's current primary function is serving the WNBA team, the Seattle Storm. The arena also hosts a number of concerts and other various entertainment events throughout the year. It has a maximum capacity of 17,072 occupants. Key Arena is also the first publicly financed arena in the area to be fully supported by its own income for the building, according to an article from the Seattle Real Estate Analysis. This feasibility study has been designed to determine the financial viability of bringing the Seattle Supersonics back to the city. The main questions we plan to answer are what and how are the best ways to do this. The options include building a brand new arena or renovating Key Arena to standards of NBA. And building a new arena would provide the city with a new landmark, and although it would be more more expensive and require more funding. Remodeling Key Arena would be a cheaper option, and funding is currently being discussed in the city of Seattle, with a number of investors stating their willingness to fund the cause. A number of different options for funding the project are public, self-financed, and private. With public funding, we can get the funding through taxes, although it will have the most negative impact on taxpayers specifically. Self-financed, it would be funding by revenue from an arena and non-arena streams. There's currently a proposal for funding through 30-year bundings that are tax exempt. And also, it'll come from luxury suites, club seats, naming rights, advertising rights, concessions, parking, and player salary surcharges. And also private funding where investors would bear risk against any revenue shortfalls. Studies have shown that for new arenas, revenue generated from increased prices on PSLs, improved attendance, have created a substantial increase in income. Building a new arena will allow the franchise to market alternative and expensive seating options to the fans, along with investing in premium players, thereby improving the quality of the team to sustain the growth of the revenue. Upon analyzing these options, we have decided that the best route to take will be to build a new arena, which will cost approximately $490 million.
This brings us to our pro forma financials. We're just going to run through some numbers for you real quick. Since we did decide to go with a $490 million investment, you'll see this down here in our assets. Start off with the current assets. Our first year, we're looking at getting around $13 million. We'll go down. We're going to do our land acquisition at $3.3 million. And as you saw before and heard before from Jordan, we're going to decide to go with the $490 million option to do our arena with. 200, which is going to come from city-backed tax bonds, and 290 is going to be from a private investor. We're going to get about $500,000 in equipment, and then you're also going to see the accumulated depreciation, which is going to come from the depreciation schedule, and that goes throughout the 5 years here. So our total assets for the first year are looking at around 490. You'll definitely see an increase here that goes all the way through. You'll see it all the way up to 567. We're going to go down here. You can see the long-term debt. Obviously, this is going to be from our, we're doing the bonds here, so that's where you're going to see that number coming from. Our liabilities, our total liabilities, which we're going to add here with the owner's equity. Here's our private investor. These 290 straight across the board. Our retained earnings is what we're going to get from the income statement. This is all accumulating after 5 years. Obviously, we're going to hit a loss in the first year, which is going to be completely fine. We understand that. We're going to get $13 million the next year, which will bump us up, and we'll actually see some retained earnings coming through here. So what you see here is our total liabilities and owner's equity. We're matching up good with what you see up here. Everything's balanced on the balance sheet. We're going to run through the income statement for you, which you can get a grasp on. It's for the 5 years, 2014, 2019. We just did a basis of what we think we can get with the general admission. We're thinking we're going to get around 80% attendance. Hopefully there's a lot of commotion about the new team in the city. We're hoping with the, the average income and the corporate ratio that they have up there in Seattle, that we can actually sell some club seats and luxury seating as well. Stadium concessions, merchandise. We got these numbers a lot from the fan cost index. And a lot from averages around from some other teams that were new to the league as well. Our parking, we did a formula for that one as well, and the spaces around the venue. Our sponsorships, we did pretty much a basic $20 million, which is almost like a league average, and I think we can definitely do that. A part of the league sharing and the revenue, it's $16 million a team. You're going to see that all the way across the board for 5 years. Cost of goods sold, it is what it is. It's $9 million and 1.5. We're definitely going to make our money back on those there. Our expenses, we're going to pretty much be in the lower middle class of the NBA, with doing about $60 million in our player salaries. Our operations, which is going to, our operations general and administrative is going to take care of our front office and everyone who else works at the arena and works the other events that we're going to have at the arena, whether concert, storm, whatever. Here you might see something a little different, which is the relocation fee. This is a fine that we picked up from the NBA. It's charged for, if you move a franchise from one city to the next, you're gonna get hit with a $30 million fee. And we'll take care of that the first year. We felt like we could do that. Here you see the depreciation happening all the way across. Total's the same. Obviously, we do have about a $500,000 loss in our gross operating income, but you're actually going to see some substantial increases in that over the next 5 years. So it could definitely be well worth making this feasible. Our net income is what you see is negative 10 million. And you're going to get 13 million. Reverting back to the balance sheet, that's where you can see that it accumulates and actually makes some sense. Our cash flows, this is the basis of where where you see the cash and everything. We have our escrow and what we figured that we need to have set aside for certain situations. Our inventory is pretty much league standards and league averages. We feel like that was a pretty good ballpark number. We took numbers from the old Sonics and Portland and some other teams, Sacramento as well. This is all the same as what you've seen before, our land acquisition, what we're doing for our building, our total investing section. All these numbers are tying together and making sense. Cash T accounts, it is exactly where we're getting our cash balance numbers that are going to be on the balance sheet. You see that on the balance sheet again. Our depreciation schedule, we have our building and equipment. These are on straight line methods. We have a lifetime expectancy of 30 and 7. For these, you can just see it all the way across what you expect our total depreciation to be and our accumulated depreciation here. Also going to show you the bond amortization schedule. This is going to be from our city-backed bonds, from the taxpayers. We're looking at getting a loan or doing the bonds for about $200 million. Here you can see the principal, the ending balance. We can see where the interest adds up, and we can see how it'll eventually be paid off in the end.